I don't want to pay all of this FICA. So we convert to an S-Corp. I got to tell you, every dentist, doctor, engineer, landscaper, restaurant owner, CPA, attorney, independent consultants, we're all S corporations, because once you make $50,000 or more, I want to split this income. I want to call some of it salary and some of it pass through. This is the strategy. So one of the best ways to unlock your business potential and make more money is to use this form of doing business and create a salary that's reasonable and push out all this profit. And when you start saving this money, we're going to start deploying it in some very powerful ways.
All right. This video is correct for the most part. Most aren't. Everyone keeps saying that S corporations let you eliminate FICA taxes, but that's not the full picture, right? Yes. With an S corporation, your business profits aren't automatically subject to self-employment tax the way they are for a sole proprietorship or a partnership. And that's because in an S corporation, profits pass through to you and you can take them as distributions instead of W-2 wages. Distributions aren't hit with that Social Security and Medicare taxes like a salary is. That sounds like you're avoiding FICA, but the IRS doesn't just let you pay yourself a zero salary to dodge payroll taxes. The rules say if you work in your business, you have to pay yourself a reasonable salary before you take distributions. And here's why it matters. Number one, like there's this reasonable salary rule. The IRS expects you to pay yourself or for you to take wages and to take them in what your amount would be paid if your role would be to a third party, what you would actually earn in the real world. It looks at industry norms, responsibilities, and comparative salaries. Number two, FICA still applies to your salary, right? You and the S corporation each pay the employment taxes on the wages portion. Social Security and Medicare, exactly like the other employer-employees, right? Distributions aren't subject to FICA, but that doesn't mean you avoid payroll taxes entirely. I've seen that way too often. Number three, IRS scrutiny and reclassification. If the IRS audits and decides your salary was too low, it can reclassify distributions as wages, and you'll owe back payroll taxes, penalties, and interest. So the real takeaway, S corporations can reduce payroll taxes compared with a sole proprietorship or a partnership because you don't pay FICA on all income, only the reasonable wage portion. But you can't just eliminate FICA by labeling all of your income as distributions. That's where the IRS draws the line. There is also the fact that for many, the qualified business deduction is not applied to the salary taken, meaning you lose that 20% deduction on whatever you take as a salary. It's that 199A qualified business income deduction that you hear about. So it really depends on how much you make and the type of business and the phase outs, but that should be calculated so you're comparing apples to apples as to what the actual net money is. So many people misstate the rules or oversimplify the rules. At the end of the day, you just need to calculate your numbers to decide what is best for you, regardless of what someone like me or anyone else on the internet says. Numbers don't lie.